Okay, let's talk about adding to positions and establishing a starter or an anchor or a pilot position, which is adding a position, although it's not an existing position. So, first and foremost, adding to a position. When do you add to a position? I think most people probably just add to positions that are in their favor almost randomly or arbitrarily, or it's still going up, so let me just add more risk. And the problem with that is that obviously you're just raising up your cost basis. You're making your position potentially top heavy, and there's really no method to it. Again, usually you'll see this or you'll do this when something is going in your favor and you feel like maybe it has a lot more to give, and the position is going to run more, and you're not comfortable with the amount of size you have on. You want to really take advantage of the moment. You add a lot more, and then next thing you know, the position reverses against you, and you put on a lot more risk. So you've incurred a larger loss. So adding to a position first, you should think of additions to an existing position as if they were their own position. So what does that mean? Each addition should basically be its own positive EV trade. So what that means is if you didn't currently have on a position, that the addition could be judged on its own as either having or not having a positive expected value. So it's not something that you just throw on randomly. It's the case that if you weren't currently in a position, if you weren't currently in an existing position, that if you took this position, or rather, if you weren't currently in an existing position, this position on its own, where the market is, would be justifiably a position that you could take. Meaning, on its own, it is a trade that is worth taking regardless of whether or not you are currently long or short. So adding to a long, not just because it's up, but because it is doing something in that moment that would make that new position be something that could stand up. A good question is, therefore, if you didn't currently have on a position, would this position be justifiable? And that's where you start to realize that the positions where you're just basically chasing something up, prices continuing to roof higher, a lot of the times, if you were asked that question, you would suddenly realize that you're FOMOing into something, because it's very unlikely that there is any kind of reasonable or local invalidation for that position. All right, let's go over a trade that I shared live in the stable the other day. And this is SpaceX. And this was an intraday long. We have our first entry points right here, and then the additions, the addition, and finally the exit. And as a side note, at the time, I was also updating about a longer term position. I've covered that in detail over the last month. I think that SpaceX is a good multi-month, multi-year long at this point. So leading into this, there was a bullish bias going into this session. We had been bouncing off the lows for a few days, overblown fears around the unlocks, and what seemed to be some skittish price action to the upside in the days prior, which I could only assume was an indication that there were some shorts that had accumulated that we could possibly trade against if the market showed any further signs of bullishness. So SpaceX has been a great name to trade, period. But on this particular session, we were hunting for longs. So if you're familiar with how I trade, which anyone in the community is, right away, you're going to see reason why I got in this initial position before the opening range had established. And the opening range is just the first 5-minute opening range, which I've gone ahead and marked off. So the reason is we're already bullish. We have a strong open, and we're trading above pre-market levels. So I'm looking for a really strong, aggressive move early. If I miss this trade and I came back to the desk, this addition right here would be, as per my system, a valid reason to get involved. Okay, so this is we'll call this, these are the initial positions put on. These are the real additions where the expected value for me for this particular trade is positive. So if I miss these first additions, or if I missed the first position and I came back to this, just using that as a hypo, this would be a reasonable trade to take on its own. The market had broken above pre-market levels, established the first 5-minute opening range, have a really strong response, holding VWAP and holding averages, and we come back and we test that level, and there's a really springy response off of it. Okay, high volume off of the open, pull back on lower volume, and then finally you have a big high volume move that attempts to break back below that opening range that ultimately is rejected. So this is the first addition, realistically the first addition to a position that was established here. If this position existed in isolation, it's a position I'm willing to take. Okay, 5-minute opening range retest, really strong open, holding pre-market levels. Good. The next addition, breakout of this consolidation. Market is finally aggressively choosing a side on high volume, beginning to pick up. This is a worthy addition. Again, if this trade existed in isolation, this is something that I'm willing to take. Okay, we have a name that is very popular, very strong open, reasons leading up to this that justify, from an environment, a catalyst, right, a behavior standpoint and a technical standpoint, justify a position. I would be willing to trade this breakout with a tight invalidation. Looking at just this again in isolation. Same thing occurs up here. We have a pullback to averages, which justifiably could have been an area worth entering, but I had waited until we finally broke from that consolidation to add the next position. So it's kind of like you have the initial push, long, retest long, worthy taking, tight invalidation right here, breakout long, and then finally I'm exiting the position when things begin to roll over. Notice I'm not exiting, on this rejection. I'm exiting when it starts to look like we're trading back through prior levels. At this point, I have a trailing stop on that is a function of ATR. So each one of these, in my opinion, while not maybe the most attractive setup, would be a worthwhile trade. Arguably, this one is the one that you're probably going to get stopped out on, okay? And it suits you to learn that, buying after a move this extended into the 10:30 to 11 to 11:30 window is not the most optimal decision. So my exits line up with what I would normally think is a good window to start reconsidering, adjusting, and possibly getting out of positions anyway. Okay, as soon as we start trading 11 into 12, it's already late at that point. This actually began to ramp up further, but I'm done with this at this point. Once we get past 10:30 into 11, that sort of pre-lunch period, if we've had a really strong move early, I'm usually adjusting it by then, or at least into that. So the most important detail is, in isolation, for my system, these trades would be worth taking. Meaning, if I miss these, if I miss this, I'm still willing to take that. Again, if I missed all these and I arrived to this, I might not be taking this to add some discretion here, but this would be a trade that I could take, right? I could take it. Now, again, to add just some discretion, and this is all discretion, right? But am I going to take this if I arrive to the desk at, let's say I'm busy and for some reason I'm not at the desk and then the market is breaking up before 10:30 after this, level extension? Probably not. I mean, at this point, we're beyond a day's ATR. So no, I'm not going to be taking that trade. But again, could I? Absolutely, right? So the point is that if I had no position up into any of these, would I be able to take this trade? And if the answer is no, then you're using open profit as permission to take a lower EV trade. Meaning, if you're just buying here, right? You're just buying here, right? Maybe you're looking at this as a retest, depending on your system. But if you're just aping through a move that is still not offering much of a constructive pullback, no kind of retest, no consolidation and then breakout. If you're just buying the tops of candles, then yes, that is probably going to end up being an issue, right? So every trade, every addition should be able to be judged on its own. It should be able to, like I said, stand on its own legs, right? Did the market give you new information? Was there any structural change, structural improvement? Is the new entry, is it still attractive, right? Is the market immediately responding and in this case pushing higher? Is the invalidation, is it clean? Is it local? So that's another thing. For each one of these additions, I often will not just stop out of a position completely. I will remove based on the last edition. Okay. Before we get into the next part, as a reminder, these videos and streams are sponsored by Kalshi. If you use the link below, you probably have access to the stable already. So if you're using the Kalshi link below, which by the way includes up to a $500 bonus, make sure that you reach out to me on Twitter. It's more than likely that you'll be able to access the stable without paying the monthly fee. Keep an eye on Kalshi because this is giving you all the information you need to know for the upcoming midterms, which will probably have a pretty big impact on how risk trades. Another reminder, the Trading Stable Workshop, Part 2, starts on August 31st. So I posted about this on Twitter. This is on the Beehive newsletter below. So go ahead and click the link below and read the post titled The Next Stable Workshop starts August 31st for more details. It's going to be an incredible workshop. It is for people of all sides of the spectrum, beginner traders, brand new, experienced traders, the like. So I am looking forward to doing this. We did one last year, and this one I think is going to be 10 times better. All right, now the last thing, and I consider this like a hack or a trick. And I've been doing it for a long time. You guys have probably heard me talk about the concept of a pilot position or a starter or an anchor. But there's another one that's actually really useful. And I refer to that as a tracker. Think about it as like a tracking dart thrown into the position. That sounds ridiculous. Think of it however you want to. These are positions that you take that really don't carry any risk. Let's rewind a little bit. From April to June, the market was crazy. If you're like me, you have a variety of strategies you trade. Some of them are very short term. Some of them are short to mid term. You know, trading intraday, trading intra-week, and then some swing trades. And you might find yourself finding good intraday opportunities, but you also realize that maybe there's a bit more meat on the bone there. And through the process of trial and error, or just realizing this through experience, you start to notice that the trades you're cutting early, you wish you kept track of them. You know, as the weeks go on, your watch lists are updating, you're saving the names that, you know, fit your criteria, check all the boxes, and things are just so hot that it's easy to lose track of something. And then weeks go by, maybe even months go by, and you find a name that you traded and you just forgot about it. So the starter position is very simple. I use this a lot. I'll find something that I'm interested in that looks good, and I actually just won't trust my ability to keep track of all of the watch lists I have. And I know, and more importantly, I know that this name is something that I really don't want to forget. I don't want to forget it. And I've had this happen before where it's as simple as me accidentally removing something, deleting it. And because there are numerous names that I'm looking at, and they're all just 3 to 4 letters, right? I completely forget it. And there's no chance that my 41-year-old brain with 2 little kids is going to remember what it is unless I get lucky. So there are many times where I will see something and I know that it's something that I really want to trade. I have an inkling that it's more than just something that I want to, loosely watch. And I will buy one share, or if it's futures, I will trade one contract in terms of crypto. And I will just use this as a way to ensure that I am always aware that this exists. And there's sometimes when I have my positions tab open and there are 10, 15 of these, and there's really nothing behind them. The notional is really small. The share size is 1. You could get away with fractions now. And the only purpose of this is so that I remember it. These are these little things that you do that go a long way, trust me. The second thing, and I find this to be really valuable, especially if you have multiple approaches with different time horizons, is the tracker. Instead of removing a position completely, right? Instead of removing it completely, leave on a little bit, just so that it doesn't get swept under the rug. You know that this is a name that trades really well, but it's also a name that's starting to shape up on the high time frame. And God, there's so much going on. What's something that I can do to ensure that I don't forget it? Just leave on a tracker. Of course, this is basically taking for granted the idea that you have the amount of capital to do this. You have, free capital and cash. But in today's day and age, buying one contract, buying a fraction of a share, this is something that I think most of my audience can afford to do. Anyhow, hopefully you found this video valuable, and hopefully it's been short enough, and I will see you guys next time.